Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Today's date, March 26, 2015. I'm going to take a look at the dollar versus Swiss. I'm looking to buy a dip. I'll tell you why. Let's start off by taking a look at the daily chart. And if we look at the daily chart action today, we had an outside day here. What does that mean? That means that we traded above and below the prior day's low and high. In addition to that, we're closing higher than yesterday's high price. So that's more bullish from a technical perspective. Number one. We're also closing above this blue line. This blue line represents the 100-day moving average. The 100-day moving average currently coming in at 95.93 and the current price is trading at 96.25. So a close above the 100-day moving average is also more bullish, especially in the fact that we closed below the 100-day moving average of the prior two days. So we closed below yesterday and the previous day. We closed above here today, switching from bearish to more bullish. Now, in the break of the 100-day moving average yesterday and the previous day, we should have seen the price move lower, and we did, but we did find support here against the 31 and the 52 area. I have that outlined in yellow here. And why is this level so important? Well, if we just take our cursor and go back in time and look at the high prices toward the end of February, what were we doing at this point right here? We were banging against the 100-day moving average. And that happened to be right around the 95.31 to 52 level. Now, what else is significant about this level? And if we take our cursor and go back to these lows in November and this low in December, what levels do they come in at? 95.31, 95.52. So we have these lows right here. We have the Swiss National Bank day right here. We come up to the 100-day moving average here, which is right near these lows. We find resistance. On March 2nd, we break to the upside, move 600 pips to the upside. And then over the last half month or so, we've corrected back down to that 95.31 to 52 level until today when we broke through that level and we should have seen what? Lower prices. And we did for a little bit, but then it reversed and started to go back higher. And we had this outside day, leaving this big tail right here and above the 100-day moving average. All of it is more bullish. I'm going to add one last thing into this chart just to increase the bullishness of this chart right now, and that's a Fibonacci retracement of this move to the upside. This is where the market consolidated for a few weeks and then started its trend move to the upside. The 61.8% retracement comes right in between those two levels. And so, again, another reason why we are more bullish here on the dollar versus Swiss on the daily chart. Now, there is a Fibonacci retracement here that is a bit of a worry, and that is the 50% retracement of the same move to the upside. That level comes in at the 96.51 level, and our high price today came in at 55. So we are finding some resistance against that 50% retracement level. We're going to need to get and stay above that level in order to push this market further to the upside. The other thing that we need to do is stay above the 100-day moving average. So as long as we stay above the 100-day moving average, I don't think there's going to be a problem getting through the 51 level. So we have our line in the sand against that 100-day moving average, don't we? So that's where we want to look to buy. And I'm looking to buy a dip. And why is that? Well, I'm going to go to the hourly chart. And first off the hourly chart, what do we see? Another reason to be long here. We moved back above this trend line here. We had connecting. Early sellers here, connecting right here. Back above that level, more bullish. So are you getting even more bullish? I am. And then we have our horizontal line represents that 100-day moving average. I put it across here at the 95.93 level. And that's going to be a level that we're going to look to buy against. Now, you see this blue line right here, that represents our 100-hour moving average. And remember, we had the 51 level on the top side. So we broke above the 100-hour moving average, but we ran into that 51 level on the top side, and we couldn't get above that level, so we're starting to rotate a little bit to the downside. A little corrective move. Why am I not worried about this corrective move? Well, first off, it's at the end of the day after a trend-like move here where the market really didn't have much of a correction here. And so we have it's going to take a breather. It's going to take a breather, and why not at the end of the day into the Asian session? Why does it typically do that, or why am I looking for that to happen? Well, look at these trend moves to the downside through here. what happens during the New York session and the London session? It goes down, and then we get into the Far East session. We have a little correction. We move down again, and the Far East session we have a little correction. We move down again. Far East session have a little correction. So the pattern is there to have the movements in the London New York session, only to have the correction in the Asian session. And so that gives us a reason to look for a correction here. But where are we going to look to buy against? I think that 100-day moving average is a perfect place to buy against. I'm going to put a Fibonacci retracement in here from our low to our high price in trading here today. The 38.2% retracement, where does it come in? Right at that 100-day moving average line at the 95-93 level. For me, it's looking like we got to be a dip buyer somewhere around the 96 level. Put your stop either below the 92 level or 90 level, or if you want to be a little bit more patient, put your stop below the 72 level. That's a 50% of the day's trading range. We shouldn't go below either of those levels, to be honest with you. So I expect to see dip buyers in that 96 region and a rotation back to the upside that takes us eventually through the 100-hour moving average, eventually through the 51 level, and we start to look toward perhaps even up its highs right here, which are the highs from last Monday's trade, or actually this is this Monday's trade, and the high 200-hour moving average, green line in this chart that goes all the way up at 98.02 level. So that's a look at the dollar versus Swiss and why I like it. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.